Hey traders, Jason here from Leavitt Brothers. So in this video I'm going to talk about what happened to many of the big high flyers that produced massive gains in the 90s. 2 weeks ago I did a video. I talked about how a lot of the stocks that have done really well and are currently down 50, 60, 70, 80% are not going to come back anytime soon. Okay, some of them are just not going to exist anymore. Some are going to come back, but it's going to take, I don't know, 10 years. And I got a little pushback from this. I got a bunch of emails from people saying like, these are great companies, blah, blah, blah. And that's fine. I'm okay with that. Like, I don't put myself out there as somebody who has all the answers. I put stuff out there. And if you have comments, let's have it. Let's have a discussion. There's no reason that we can't have a discussion. This is not a one-way communication platform here. So I'm all for people commenting and such. But in this video, I want to give like a visual of what some of those companies have done. A lot of people just assume that, you got to be nuts. There's no way it's going to take like 1 or 2 decades for companies to recover. Like that's not possible. Well, I'm going to show you some examples where it did take that long, and maybe you'll rethink holding some of these stocks that you think are great companies. It's possible that they just become dead money for a long time. So let's go through a couple, or a handful, I should say. So here's Microsoft. This is the second half of the 90s. There are some stock splits in play here. So the stock didn't actually trade at $2 down in 1995. But you can see, percentage basis, it went from 2 up to like 38. So it's almost a 2,000% return over the last 5 years of that decade. And then so let's fast forward and see what happened after that. So here's what happened to Microsoft after that. You can see the big move up in the late 90s. Microsoft came down quite a bit. This was like near 38 or so. This is down near 14, 15. I'm just eyeballing it. So that's like a 75% drop. And so what do we got here? Microsoft finally got back to its break-even point in 2014. Okay, so Microsoft, one of the greatest performers in stock market history, one of the greatest success stories in American business history, that did incredibly well, posted massive gains, everything was great. Bill Gates, the richest person in the world, etc., etc. The stock fell a bunch, and it took 14 years to get back to even. Now the stock's done really well since then, but if you were a holder, you had to hold a long time just to get your money back. Next up, Cisco, another one of those stocks that did incredibly well. Mature company, growing super fast. I mean, this company was started back in the mid 80s, so it wasn't an IPO or recent high flyer. You can see it posted a massive gain. Again, stock splits are in play. So, but the gain from 2 all the way up into the high 50s, we're talking 3,000% return. And then what happened to Cisco after the market topped? Well, you can see here the stock dropped and traded in a range, fairly wide range for many, many years. And it took all the way. This is a live chart, right? I literally just grabbed it right before doing this video. And here is where the stock is trading right now. So if you bought at the high in 2000, you're actually sitting on a loss right now. Okay, so this is one of the, another one of those great American success stories that fell. This is like $60 over here. This is under $10. So 60 down to $10, we're talking like, 85% loss. Then it spent years and years and years basing, and it took 22 years just to get back up to break even. Okay, if you don't think it can happen to your favorite stock, think again. Here's AMD. They struggled competing against Intel in the 90s, so the stock didn't do that great. But you can see in 99 and 2000, the stock went from like $8 up to 40, so that's a nice 5x return. What happened to that after the dot-com bubble bust? Whoops. Here it is. Okay, so it bust. It gave everything back here, back down into single digits, made a run in the early 2000s, could not get above the previous high, and then a long drawn out bottom. As you can see, it took all the way until over here in late 99, early not 99, late 2019, early 2020 for the stock to get back to break even. Okay, it took 20 years for the stock to get back to break even. Done really well since then. Okay, but 20 years to get back to break even. Here is AKAM. Okay, went public in October 99. I show this because we've had a lot of IPOs the last 2 years that have done incredibly well. They went public, they posted big gains. Now they're coming down hard. So here's an example. AKAM went public, 110 went up, within. This is a weekly chart, so it only covers a couple months. So within a couple months, the stock was already over 340 for a better than 3x return. What happened to AKAM? This is a live chart as of last week. So there's your big run up, gave everything back. It has generally trended up for many years, but we're not even close to the highs. And if you look at, say, the IPO print, like right there, so there you go. We're basically even where it went public. Okay, so anyone who bought on the way up is sitting on a loss. Anyone who tried to buy a dip on the way down thinking this is a great company, it's an up and coming company, like this is a great opportunity to buy a dip, like you're down money, or you're maybe close to break even after all these years. Next up, Amazon. Everyone knows Amazon. It posted a big gain in the late 90s, very volatile in 99. Let's see what happened after that. Okay, this is what happened. Now, obviously, Amazon, they haven't done any stock splits, so the stock the stock being over here at like 140, 145, obviously the stock's much higher. But if you were a buyer over here at the high, it took all the way till 2009 to get back to break even. So it took 9 years from 1999 here to 2009 here. So it took 10 years to get back to break even. Done really well since then. But for anyone who said, hey, I'm just going to buy and hold, yeah, it eventually worked out, but it took 10 years just to get back to break even. Here's GE, another one of those like most admired companies. Everyone thought you had to own it. Company was almost 100 years old. Look at the growth rate. Look at that. That's about as steady and consistent as you could possibly be. There are some stock splits in play here, so these prices aren't the actual prices they were, but to go from 30 up to 240, 250, that's an 8x return. What happened to GE when the dot-com bubble burst? This is an updated chart as of last week. So that's your big run up in the second half of the 90s. Huge drop, failed to get back up there, 2007, and then back in 2016, got up to there, so it got actually pretty close. 16 years later, it was still short of the high, and now here we are, way down here. So now we're like 22 years after the high. This is one of the most admired companies in the history of the United States, and 22 years later, the stock is still down like 60%. Intel. They kicked butt in the late 90s. You can see big run up, big percentage gain. What happened after that? What happened after the dot-com bubble burst? Here it is. Stock gave everything, not everything, but it gave it all back. Spent many years trading sideways, and it took all the way until 2018 to break even. And this is an updated chart as of last week. So you got the high here in 2000. You got close here as of last week. So basically the stock has done nothing over 22 years. So anyone who bought a dip in here, bought a dip, this is a great company, I'm just going to hold it. Like, it has to go up. It's the leading semiconductor company, et cetera, all the different stories people tell themselves. And you sat in a loss or a break-even trade for 2 decades before you finally made a little bit of money. Oracle, steady grower in the second half of the 90s. Then it went vertical in that last year. What happened after that? It gave a bunch back, and if I draw a line straight across, we're talking it took all the way till 2014, 2015 to finally get back to even. Here's Qualcomm. I got 2 more here. Qualcomm, slow grower, not really a whole lot of movement there. Then obviously it went vertical for about a year before the dot-com bubble burst. What happened after that? Well, those gains were given back, and it took all the way until approximately 2019 to get out even. Okay, so it's done really well overall since then, but still, if if you're a buyer over here on the way up and you didn't sell on the way down, if you're buying dips, it took you 2 decades to break even. And even though the stock is up this much over the last couple of years, you could have made more money just putting your money in the S&P 500. One more. Here's Juniper, another one of those IPOs. IPO near 15, went up to 125, 130. Huge percentage gain. What's it done? This is a live chart as of a week ago. So as you can see, it gave everything back and then has traded in a range for the last 2 decades. Okay, so I post these because a lot of charts have done well and they've come down hard, and people are like, hey, this is a great company, it's a growth stock, I'm going to buy it. Well, look at Juniper Networks here. It has gone nowhere for 2 decades. Okay, and these are just the charts of that I can still get. There are companies like Dell, which fell a bunch, went private, and then relisted. You have companies like AOL and Yahoo, which still around, but they're a fraction of their size. I mean, in fact, for AOL, like before I did this video, I went to AOL.com just to see if it was still existed. I didn't know if it did. JDS Uniphase, Infospace, Global Crossing, there's like thousands of them. If you go to Wikipedia and do a search for .com bubble, you'll get a list of hundreds and hundreds of stocks that don't even exist anymore. I'm showing you the ones that actually survived. There were a lot that didn't even survive. So again, my purpose here is that when you have some of these stocks that you think they're growth stocks, the media keeps feeding them to you, analysts keep feeding them to you. They lead you to believe that they're great growth companies, and like what's going on right now is just a temporary glitch, and they're going to regain themselves. Some are, okay? Some are going to be the next Amazon, but it could take many years to get back to break even, and like maybe 10 years from now they're up huge, but you might have to sit in a loss for many years. Others might never get back to break even. Others might be like GE, very well-respected company that never gets back up there. And others might be on the list of stocks that just don't survive. Others might be the next Global Crossing that just ceases to exist. Okay? So whatever story you've been told about some of these stocks, just know that like they don't have to come back. Okay? The market always comes back. I 100% promise you the S&P 500 is going to make a new high someday. I don't know when, but I absolutely promise you it's going to happen. But there are no guarantees when it comes to an individual company. Okay, Intel was as respected and admired as you could possibly be in the 90s. So don't think that like, hey, NVIDIA, they have to survive. There's like no way they can't. Well, I think they will. It's a great company, but it's possible that they don't. Okay, so just keep this in mind. Keep in mind that not all stocks are going to survive, and that the ones that do could take a long time to recover. All right. In another video I'll maybe do later this week, I'm going to talk about like what companies actually did lead in the 2000s. Okay, so these are companies that did great in the 90s and then crashed and burned, and they were dead money for a decade or two. And I'm going to show you that like what happens is the next decade you have like an entirely new batch of companies that come on board and lead the way. Okay, so that's what I'm going to do in the next video. All right, until then, we'll see you next time.